I am excited to talk to Mike and Sangeeta here. Quick intros first. I'm Rajeev. I am a general partner with Sapphire Ventures. Been investing personally for over a dozen years across a few dozen companies now, predominantly in all things B2B software and B2B fintech. So excited to be here. On the Sapphire Ventures side, also Sapphire's been around as an entity and a firm for a few decades now. Our mission and mantra is to partner with and help build companies of consequence. And the way we define that is category defining, sort of enduring businesses, really, again, focus on B2B software globally. So companies like DocuSign and Looker and MuleSoft and Braze and Monday.com and JFrog and a whole bunch of others over the last 2 decades. So won't bore you with any more of the details, but excited to be here. Maybe Mike and Sangeeta, please introduce yourselves.
Thank you. I'm Michael McBride. I have been on your side of the table most of my career. I'm an operator, originally a mechanical engineer from founding or early stages. I've been a part of a number of companies that led to 4 acquisitions, 2 IPOs. Most recent of which was at GitLab. I was chief revenue officer there. We went public about 2 years ago, and on that 5.5-year journey, we went from about 5 million in ARR to well over $500 million. Recently, I just joined GV, Google Ventures. I'm a general partner there, and I think most of you know the firm, but we're an independent venture capital firm, happen to have Alphabet as our backer. But we deploy about $1 billion a year into the startup ecosystem, currently manage about $10 billion total under our assets.
Awesome. Sangeeta.
Good morning. My name is Sangeeta. I am the Chief Revenue Officer at Miro. Miro is a platform for visual collaboration and innovation. Pretty large scale. We are at the growth stage. We have 75 million users or so around the world. We operate in 13 cities. And our mission is to help anybody that's building the next big thing, build it with collaboration in mind. Apart from that, I also am an investor in a couple different funds. I get a lot of energy working with entrepreneurs. One of the funds is a women-led, it's focused on women-led ventures. And prior to Miro, I was at companies like Okta and VMware. I usually start at a startup, and then the startup gets acquired. And I feel like I've been on that journey for a while. And I'm excited to be with you all.
Great. Well, let's get started. The first question I had is around the relationship between founders and entrepreneurs and venture capitalists. What I've found in my short time is sometimes that relationship may be perceived as adversarial, a zero-sum game. Sometimes it's perceived as the venture capitalist could change the fundamental trajectory of the business in totality and in an ongoing basis. Have a lot of thoughts on that, but I want to get your thoughts. Maybe, Sangeeta, if you don't mind, we could start with you.
And the question is?
The relationship, and how should founders really benefit or think about benefiting from a VC and that relationship?
Yeah, I think the critical thing is to understand how to leverage the VC relationship for you. So VC is not anything and everything, but they can be incredibly powerful in helping you move your mission forward. So depending where you are in the life cycle of your journey, it could be pre-product market fit. At that stage, I'm trying to use the VC contacts I have to get to as many prospects as possible. But if to fit into the VC model, so for us right now, we're at a growth stage. We're looking for introductions to large companies. It's different than our need was many years ago. And so what we've done is we've understood how does the machine work in these VCs and work into that system. So we've got a very efficient model of leveraging what we need from the VCs at this stage, which is really introductions into large companies. So I think the goal is you have to be clear about how you want to leverage that relationship. They cannot be everything for you. Be very clear with the expectations, but then go to them. They really do want to help. It's up to you how you make it effective.
What about you, Mike?
I think a lot of entrepreneurs underutilize venture capitalists. The VCs really are like any other addition you're looking for your company. You're trying to build the best possible team with the highest density of talent to go accomplish your goals. And adding a VC is like hiring someone. You're looking for new DNA, new capabilities that are going to help you to accomplish that goal much more effectively. And if you do that, like you're hiring someone, you're going to have a partner for a very, very long time in building your business who's going to challenge you. They're going to push you on the things that you need to be pushed on, but also support you in ways that you wouldn't have had that support otherwise.
Yeah, no, I think that's a great point. I think also just building sort of trust and understanding how that VC likes to work with the company. Some VCs and some companies' founders like to have meetings every week, some is meetings every month. And so understanding the altitude that any founder and VC wants to work with, I think that's always a great way to build trust as well. The topic of this panel is striking a balance. One of the questions I always get asked on the VC side of the table, and I'm sure you two deal with in a variety of ways as well, is kind of this paradigm between growth versus cash burn. It kind of drives me nuts because I don't think they're mutually exclusive. I think there's businesses that can grow fast and burn nothing and vice versa. But that seems to be sort of obviously a sort of trade-off that's perceived in the ecosystem, and we've gone through a wave here from 2021 and onward. Mike, talk to me about that trade-off. How do you perceive the trade-off? How should founders think about presenting that trade-off, if at all, if it is a trade-off to the board, as they think about growing their business versus burning capital?
I think it's a false trade-off because it's not directly linked. There is a correlation. But what I find is most effective is instead of thinking about burn for burn's sake, hey, if I burn more, I'll grow faster. Maybe, maybe not. Really what you're trying to do is figure out how do I be very clear about discrete investments. When I'm spending money, I'm not burning it, I'm putting it into something. So I should know what the goals are, what each investment is that I'm going to make that's going to try to accomplish that goal, and in what time frame. Right. And so then I have this list of these discrete investments. Makes it easy to communicate to the team, easy to communicate to investors. But importantly, I know exactly where the line is. If I need to spend less, I know the lowest priority investments that I'm going to cut off that list. But I always know, hey, I'm spending money on something. What's the return I'm trying to get? And if I'm not, I'm going to change something.
Right. Right.
Yeah, I love that. I think the way I look at scaling is this 3 stages of the company that you're building. There's the pre-product market fit, and you're doing anything and everything at that point to do non-scalable things just to make sure that you've got that gate achieved. After that, and that's to me the 0 to 1. After that, there's a 1 to 10, because you're trying to also understand what's go-to-market fit for me. Do I go through a channel? Do I go hire a bunch of direct reps? Is there a different kind of flywheel that I need to build? And at that stage, I think you have to be very, very careful about where you spend your money. Because if you do spend too early, you're spending it on the wrong things. So a lot of experimentation is crucial at that time. After that, when you're at the growth stage, you're still having to be very judicious. But then by that time, you've got a couple of things that become speedometers for your business. One is, what are the metrics that tell you you're in product market fit? And then what are the metrics that tell you you're efficiently growing your go-to-market? And there's lots of metrics you can talk about. But the goal is that you're looking at that dashboard and saying, am I burning too much? Are these metrics going sideways? And watching that gradually, because I agree, it's a false dichotomy, and you've got to do both and do it effectively.
Yep. No, that's helpful, and that's a good segue. Sangeeta, you mentioned sort of 0 to 1. At Sapphire, we try to back companies post-product market fit. I think Mike sometimes is probably right on the border at GV, but the product market fit it's also a very subjective term, and it's kind of a moving target. If almost every VC might even define it a little bit differently. What's most important is how a founder sort of defines it, because that's when you actually can start to invest or burn with some level of confidence. Mike, talk to me about how you define product market fit. What are some of the pitfalls that maybe some founders and operators run into when they think they have it, and why? Let's have a dialogue on that.
Sure. I think that one of the common traps is it's really easy to get a prospect or a customer to tell you they like your product. It's really hard to get them to write a big check and do it year in, year out. And I find closing the gap on that, there's signal. How many users you get, how fast you're growing, how many trials you have. But I think probably a lot of you have heard of Rule of 40, trying to get a significant percentage of your customers to say, I can't live without this. But that's, again, it's talk. What you'll start to see is actions. And one of the things that I find is a great test is, number one, do I really understand the problem that's going to get my customer fired? It's not a problem that, ooh, it'd be nice to solve this. Oh, I'm looking for a solution someday on this. I will lose my job if I don't solve this problem. That means I'm at least attaching to something meaningful. If I can get my product to solve that problem, then I'm onto something. The second is, can they really live without my product? And the way I start to find that out is they start asking me for things like, hey, I need price protection. I need SLAs because I can't have this product go down. If it goes down, I have a problem. I lose my job. Those are all really good indicators that my product actually starts to matter to them. And that will end up showing up in retention and growth.
Yeah. No, great answer. Sangeeta.
Yeah, I think retention is crucial in measuring product market fit because otherwise, as a founder, you're so excited that somebody wants to buy it, and three of them tell you they want to buy it, and you think, great, I've achieved it. I think it's risky to think of product market fit as a feeling or a revenue number or a number of customers because what you're really trying to understand is retention at the end of the day is a lagging indicator. That's also the challenge. How long can you wait? So what you really need to understand, I believe, are the leading indicators of retention. And so suppose you're a messaging platform, then you're trying to understand three numbers. How many of your customers need to be doing how many of one event in how much of time? Then you start to see the metrics. This is the way we measure everything we do at Miro. We're looking at the leading indicators, trying to see how are those moving as we're bringing things forward. Even now when we are thinking about product market fit, because the market is also constantly changing. You're not ever done with PMF. But I do think that it's very important at this early 0 to 1 stage that you're looking at the leading indicators constantly to see if you're hitting them.
Yep. And Mike, I remember in our prep, you gave the example, and we see this a lot at Sapphire too, where a salesperson or a head of sales or even the founder might find themselves susceptible to chasing after one customer that may pay them $1 million a year, $1 million in ARR, and that's huge, and I get it, and that's very tempting. Yep. But you go off and you do that, it's a 12-month sales cycle, and you get that $1 million, and you think, okay, I've got it, maybe I can raise VC funding out of product market fit. But at the end of the day, that's just one customer. And right, so that doesn't mean you necessarily have a product market fit, that's a product customer fit. And so sometimes having 20 or 30 customers paying you a much smaller amount is actually better than that one customer, at least in the early days, based on all the measurement and learning you get out of that, right?
Agree.
No, that's helpful. Speaking of 0 to 1, what do you focus on? Who do you hire first? Is it a VP of sales? Is it a VP of marketing? Are you even ready? Is that more of a 1 to 5 scale? You're just trying to build your business like a lot of the founders in this audience, just from a personnel perspective outside of their own effort. Who do you go after and what should you focus on to get your business off the ground? Maybe Sangeeta, starting with you.
Yeah, so I think who you bring in at this stage is absolutely crucial because the goal, in my view, is you're traversing the learning cycle as fast as you possibly can. And you're bringing if you're looking at go-to-market hiring, I think you're bringing in people that are considered the Renaissance salesperson. It's a Harvard Business School concept, but essentially these are people that are evangelizing what you're doing, and they know how to learn. They're very curious, they're extremely coachable, and they're very mission-centric. So they're essentially an extension of the founder team. Once you've understood how these people know how to sell, then you've begun to traverse the go-to-market cycle. So I said product market fit, you're learning a lot about the product at that point. Then there's the go-to-market fit, you're learning a lot about that. Once you've figured that part out, then you think about scale, but you still have to traverse that boundary very carefully because if you go too far into the rep that was successful at Oracle or Snowflake, you're bringing in people that are not quite ready for the stage that you're in. So you have to make sure that you're not bringing in somebody who was just successful somewhere else. 0 to 1 is, to me, the mentality of somebody who's an extension of your evangelism, who's trying to learn as fast as you can and bring that in first. Whether you're bringing a sales rep or you're bringing a VP of marketing, which I think is one of the earliest hires I would recommend, or you're bringing a VP of sales, they all have to come in with that perspective rather than, I have a playbook, I know exactly how it worked, and I'm going to just do exactly that. I think then they're losing out on the learning that they have to do.
Yeah, Mike, anything to add?
So I think Sangeeta nailed it. The one thing I would probably drill down on for this very, very early stage is the learning she describes. That is so important, especially as a founder. When you're getting good at that founder sale, this first hire is going to help you learn how to do that better. They're going to help you A/B test it. They're going to add structure to your founder sale. They're going to make sure in some of the conversations you don't say what you normally say because you're trying to learn. And that learning will be so valuable to you that yes, you're adding new customers, but if you can figure out how you added them, then as you scale, you can teach those next reps and the next teams and the marketers how to message that in a way that you know works. And the only way to do that is some structured learning.
Yeah.
If I can add one more thing,
Yeah,
I think
please.
what I found, companies that have scaled the fastest and the most incredibly well, at this stage have figured out the flywheel. And they're spending a lot of time trying to understand what that flywheel. And there's an article from Atlassian CRO a few years back where he said, I'm just going to show you my sleep stats. They're so amazing because the machine is working while I'm sleeping. and you're trying to figure out how can I learn that faster, because then you're in that cycle where you don't need to spend as much, your burn rate is down, and you're just scaling up your growth as efficiently as possible.
Yeah, no, makes sense. Accelerated learning, that's makes sense. And another good segue, Mike, I want to start with you. Hiring a VP of sales, like very tactical. You're in an interview, what to look for, what to ask. I'll tell you as a board member doing this a long time, you guys are all-stars, some of the best CROs, SaaS has seen broadly. But I feel like even any CRO worth their salt could probably fool me in an interview, right? They're a salesperson by nature. What should people watch out for when they're just going out there, hiring their first director, sort of VP of sales, and trying to scale their business?
I think, especially as an early stage founder, you should feel, if you're interviewing the right person, as you start that interview, you should feel it switch and feels like they're interviewing you. And they're interviewing you because they are skeptical, they are curious, they're asking you a lot of questions, they're qualifying you. They want to understand your problems and your strengths before they start to actually answer your questions on how they would approach it. If they start out by selling themselves right away, they're probably not going to be a good fit for the challenges you have ahead.
Yeah.
If this is also someone that you think actually wants to work for you, they should be running a process on you. Before the interview, after the interview, they should be doing reference selling. They should have people they know calling you, who know you. Those are all indicators of how they would sell to customers, and they should be selling to you the same way.
Yep, interesting.
Yeah, I think Mike nailed it. I don't have anything to add.
Yeah, and you talked about the evangelism point before. Yep, that makes sense. And then on, just for the sake of the audience, everyone always talks about metrics and benchmarking. We all, know the ARR growth and magic number and all the standard SaaS metrics. What other metrics matter? I guess drilling in a more specific question is at that 0 to sort of 5-ish stage. What are the metrics beyond the high-level metrics that you think matter that entrepreneurs, founders should be focusing on to really measure their business and the health of their business? Sangeeta?
I believe that it's most crucial to figure out how to have that dashboard that I mentioned and the right metrics there. Yeah, you could look at LTV CAC. These are like big metrics that you'll find out after some time, and you don't have the luxury of time to figure that out. You have to look at leading indicators constantly. For me, the product metrics that I look at are what are North Star metrics for my product, and that could be defined differently for you. But that's something that we watch even now. Even at this stage with 75 million users, we're still looking at the North Star metrics. So I think that's part of that dashboard where you're constantly watching for product market fit. Then you're looking at leading indicators of other retention factors that you might be looking at. You're looking at, are they signing up for multi-year deals? Are they looking at price protection, as Mike looked at? Then on the go-to-market scaling side of it, I actually try to break down what does LTV to CAC ratio really mean, and then look at what are the parts of CAC that are material for me. And I'm trying to understand how much does it take for me to bring in a lead, and then how many sales qualified leads does a sales rep actually generate? How many accounts do they actually close? What's the ACV of that? Depending on the business and where you are, you're trying to break that thing, which people will tell you, and it has to be greater than 3. Doesn't mean anything to anybody because such a big number, it takes so long to figure out that ratio. You have to keep bringing it back to the basics of the business. And for me, I'm trying to measure how much does it cost for me to keep a rep? How productive are they? How much does it take for me to hire to acquire a customer? How much can I get in terms of ACV for them? And how much does it cost me to serve them? Yeah. Those are the crucial things that I'm looking at.
Yep. I like Sangeeta, that's fascinating. I mean, Miro's, you all probably know Miro, it's hundreds and hundreds and hundreds of millions of revenue at this point and a category leader, but she mentioned kind of looking for product market fit. I like to tell my entrepreneurs, because I see this at 50 or 100, 150, you have to almost like re-earn your product market fit every year because your core market, in the pace of technology, you have competitors coming up, you have competitors coming down, now you have AI that might eat your whole business. And so you have to constantly be looking at your business and re-earning and reinvesting and knowing where you're thriving and when you're not thriving. Then you become multi-product or international, so how do you get product market fit there? So product market fit is not just like go-to-market repeatability, VCs say, and we'll put money. It's not a one-time thing. It evolves constantly. Every 5 or 10 or 15 of ARR, it's evolving, right? Mike, anything on the metric side that you would add to Sangeeta's?
Yeah, I love what Sangeeta said. When she was talking about what matters to you, it is really important for you to know what matters to you and right now. Because things like bookings, retention, you'll measure that forever. So sure, measure those. But this quarter, this month, there is probably something that matters more this month than anything else. Know what that is and know what the leading indicators are. If I know I need to have 10 customers that are actually using my product in a real use case, well, that means I need to have 30 prospects who are actually going to use it in a real use case. And I need to have that this month, or else I'm not going to have that by the end of the quarter. So you can kind of get back to something that's really practical, but also clearly presents the work ahead for that week, that month.
Yeah, no, I love it. Well, Sangeeta, Mike, thank you so much for the time. We're up on time. I wish we had more, but hope folks found it helpful. Thank you.
Thank you.
Thank
Thanks
you.
for having us. Thank you.